Good morning, and thank you so much for joining our quarterly plan sponsor fiduciary training. My name is Jenna Witherby, and I'm one of the advisors on the team at 401k Plan Professionals. Perhaps you already work with our team, or maybe you are new to our team. Today is, of course, focused on fiduciary responsibilities, but I think throughout this presentation, if you're not familiar with us yet, you'll kind of get a flavor for our team and our process and how we do things. So today's training is a part of our quarterly series. It's about 30 minutes. I have a lot of content to cover in this training, so I'm going to dive right in, but ask questions in the chat box as we go, and I'll pause a couple times and definitely at the end if there's questions. These trainings are held quarterly, so the next one is November 9th, and you'll get a recording afterwards, so you can always refer back to it. This will also live out on our website and on our YouTube channel, which you can find us there at 401k Plan Professionals, and you can subscribe. So that way you get a notification every time we have either one of these or a part of our monthly webinar series, various topics. In addition to getting the recording of today's training, you'll also get this nice PDF document with everything that we're covering today, kind of a good summary and some compliance deadlines for this year as well. And there's an optional credential that I'll talk about at the very end as well. So that's something that you can go through, and we cover the cost, just something additional that you can do to further your knowledge. But we have 7 main sections today that I'm going to be covering. And truly, this topic isn't necessarily exciting, and it's not meant to bore you or even scare you, but the more that we know and understand and have knowledge of this topic, we're just going to be more confident in what we do in our day-to-day work, both our team and you as you are serving in various capacities, perhaps with the 401k plan. So first, let's talk about your role as a fiduciary. Really quick, I just have 2 polls here throughout the presentation. But first, just to kind of get a gauge of where people are at, please rate your confidence when discussing who's a fiduciary and your own role and responsibilities. So if you want to take a moment and vote there, kind of helps me to feel for where you are at. Okay, so looks like most people, I'll share the results here. Most people are feeling somewhat confident, and a couple people are feeling very confident. So that's good, that's encouraging. And by the way, we have seen people hop on multiple of these trainings. So I think it's great for someone that's maybe new to working with us, new to being a fiduciary, new to being a part of a 401k committee. But even if you just want to brush up on these skills, brush up on this knowledge, and you can certainly hop on as many of these as you would like. So fiduciaries have important responsibilities in protecting retirement benefits. I'll go through more specifics in a moment, but these are basically individuals who make or have the authority to make the decisions on behalf of the plan. So 401k, 403b, I'll probably more often than not say 401k. But in general, this is someone who either exercises discretionary authority or control over the management of the plan or the management of the disposition of its assets. Number 2 would be our team provides investment advice for a fee, right? Typically an outside investment advisor. And then lastly, has discretionary authority or responsibility in the administration of such plan. Key thing here is your title within your organization doesn't matter to ERISA. In other words, in determining whether you are a fiduciary or not, it doesn't matter what your title is. It's more having to do with your actions and your role, the actual things that you do. So it doesn't matter if you intend to be a fiduciary, know that you are, or are authorized as such. There's named fiduciaries in plan documents. This could be in the adoption agreement or the summary plan description that your employees get. This could be someone in human resources, in the finance department. This could be a third party, an administrator, a trustee. But keep in mind too, there's unnamed fiduciaries. So somebody who makes decisions or is involved in the admin, whether they're named anywhere or not. And I think a great example here is whoever is submitting, say, payroll contributions into the plan. They could be a payroll specialist. They're not listed anywhere in any legal plan documents or anything like that, but they are the ones that every payroll period are logging in and submitting those contributions. So they absolutely would be a fiduciary. So it's important to understand which plan related activities are fiduciary activities and which are not. I'm going to show you a list here in a moment, but it's important to know that the courts will identify fiduciary activities and the fiduciaries who perform them, and then determine whether or not the performance of those activities meets the fiduciary standards. So here on the left are some examples of fiduciary activities, just to kind of call out a few, but selecting and monitoring the plan investments, selecting and monitoring your 401k provider and your investment advisor. On the right, examples of non-fiduciary activities, calculating benefits, processing claims, establishing a plan in the first place, amending your plan, or if you have to terminate your plan. Those are non-fiduciary activities. Those would be more business decisions. So part of this training, and especially if you go through that optional credential, you'll learn more here, but you need to make the distinction between straight business decisions and then fiduciary decisions. All right. So options for outsourcing. So many plan sponsors and committee members are going, okay, I don't have the time, the expertise, the desire to manage all of these aspects of the 401k. So you can outsource certain activities, primarily the record keeping. So your plan probably partners with a provider, right? And then investment advisory services, that's where our team would fall. And then even to go as far as help with processing quadros, loans, hardships. Some providers have teams internally. You can hand off those kinds of responsibilities to them, or you could work with a third-party administrator if you don't want to manage the approval and the processing of those types of requests. So digging deeper on basic ERISA fiduciary duties. So the fiduciary's performance of these duties, which we'll talk about, will be measured in large part by two key concepts: loyalty and prudence. So you'll see and hear these terms quite a bit when it comes to fiduciary duties. So loyalty, ERISA requires that fiduciaries act solely in the interest of the plan, the participants, and the beneficiaries, for the exclusive purpose of providing benefits for them and making sure they pay only reasonable plan expenses. Now, you yourself may be a participant in your plan, but remember, when it comes to your fiduciary duties, you don't have your own individual hat on. You have your fiduciary hat on, and you are acting in sole interest of the group collectively. And not for any one person's benefit or the company's benefit or anything like that. And then prudence. ERISA requires that the fiduciary act with care, skill, prudence, and diligence. And the thing here, I would say the key is the last word on this slide is process. So when evaluating someone's prudence in plan administration, investments, it's primarily one of process. And that is why we talk so much about having documentation and just a process in place that is outlined. And truly, that's one of the things too with aligning with a team like ours. You know, this is all we do. We work only in the retirement plan space. So we have a really well-oiled machine, right? We have all these processes in place. And everything we do is to protect you as fiduciaries and us as fiduciaries as well. You don't have to make all the right decisions. For instance, a great example here is, say, on investments. Say you've been watching a particular sector or investment and it's been lagging for several quarters. It's been on the watch list. We don't know what will happen for sure in the future, but we make our best decision with the information that we have at that time, and we document the process with arriving at that decision. Down the road, that fund might have recovered just fine and it's performing well again. That part of it is not in the equation when it comes to, did you do your fiduciary responsibilities properly? But as long as you took all those steps to document that process, then you're covering that responsibility. And broadening these basic fiduciary duties a little bit more. Again, we talked about managing the plan with only the best interests of the participants and their beneficiaries, keeping the plan expenses to a reasonable level, following the documents. So making sure in your day-to-day practice, you're doing what the legal adoption agreement says as far as eligibility and distribution rules and the match and other employer contributions, making sure that what's in the document is actually what's happening in practice, ensuring that the plan's investments are diversified, and then doing all of this with care, skill, prudence, and diligence. Some committees also have, say, a board of directors and they want a committee charter. That's even another kind of layer. It's another document that some of our clients have in place, not many, but it's basically the board of directors is saying, here's these committee members, we are letting them make decisions based on the plan. So just kind of having another layer in your file. That's something to consider, perhaps. The next section is on overseeing investments. And this is definitely where our team comes into play quite a bit for committees. When it comes to the plan investments, most 401k, 403b plans, the way that they are participant directed accounts. So the participants themselves can decide, at the end of the day, they get to decide how they invest their money. But as plan fiduciaries, we don't just say, okay, good luck. There's thousands of mutual funds out there. You find the ones you want. No, we are responsible for choosing a core investment lineup that will be made available to them. So say it's 15, 20, 25, maybe different mutual funds that are in their core list. And most plan sponsors decide to appoint an investment committee that is given decision-making authority with respect to the selection and oversight of these investments. And then taking it a step further, many of them hire an outside investment advisory team as well to help them arrive at those decisions. So our role, 401k plan professionals, we fall in basically one of two roles here for you in the box. We're either a 321 investment advisor or a 338 investment manager. 316 on the top of the screen, that more pertains to the administration of a plan. We don't take on that role, but that's more handling reporting and disclosures, notices that are required. So a lot of times we see third-party administrators acting as a 316. But our team, either 321 or 338, excuse me. But truly at the end of the day, we're taking the same actions here. When we come to a committee meeting, we're serving as a subject matter expert. We're prepared to discuss your investments, perhaps make recommendations on funds to either add, remove, switch out. At the end of the day here with a 321 arrangement, the investment decisions still land on the committee. So the committee is making the final call, maybe having a formal vote, something like that. In the 338 arrangement, we're doing the same actions, but at the end of the day, we get the final say. We have full control over those investment decisions. And how we handle this is we don't charge anything extra, because we just, at the end of the day, we're still doing the same amount of work, the same actions. It's just technically who gets the final call. So in a committee meeting with a 338 arrangement, we could say, here's the analysis, here's the proposal, here's what we are going to do. So no vote, no really technical say by the committee. A plan sponsor, keep in mind, can never totally step down from the role as a fiduciary, because there's certain things you still can't take off your plate. One of them would be making sure you're submitting the contributions on time. That's a big one. Nobody can do that for you, that you outsource it to. And then you are, of course, hiring your investment advisors and you're hiring your providers. So still needing to make sure that you are aligning with people and companies that you trust. The fiduciary responsibility in regards to the investments, so selecting and monitoring. I talked a lot about documentation. With respect to your plan, you might have different demographics, different needs. There's no really one size fits all here. And teams like ours, investment advisory firms, they can help you with what is a best fit for your company. Consider demographics, like I just mentioned. So age, education level, sophistication with investments. There are many different types of investment vehicles. I would say 99% of the time in 401ks, 403bs, you're going to see mutual funds, which are pools of many different company stocks. But we do see sometimes collective investment trusts, so CITs. That's more of a larger market concept that we're seeing come down to the mid and small market, separate accounts, and on the rare occasion, employer stock as a part of the retirement plan. Can't say it enough. Key here, process. So you're not judged by the investment results that you achieve for your plan. But really, it's whether you acted prudently in making those decisions, and then did you document them? An investment policy statement is a document that we like our clients to have on file. We keep it on file as well. It's a very general document outlining that process and what would deem it reasonable to remove a fund out of your plan, and some different metrics that we look at when we are monitoring the investments. And we work with ERISA attorneys to make sure that the wording in there is acceptable and it's appropriate. You don't want too strict of an IPS that you can't follow. So you'd rather have one that's more general, more broad, but still is a good guide. And then we get our fund analytics from multiple sources, multiple places, but just to kind of give you a flavor for some of the reports that you might see in our committee meetings, we're looking at Morningstar data, so past performance, manager tenure, turnover, expense ratio. We're looking, the one on the right is our scorecard, so looking at each fund for that time period. How does it compare to funds in its same peer group? And then for your plan, how many people, how much assets are in each fund. And then we also tie it into this 12-point qualitative and quantitative scoring system that we call FIRM. And it's based on 12 different performance criteria, again, qualitative and quantitative. But it gives each of your funds a score every quarter. And not only can you see it for the current quarter, but the previous 6 quarters. And so this is a great way for us to track trends and see if there's any particular funds we need to do a deeper dive on. We keep track of what's on the watch list. All of this too, by the way, is in the minutes. We take minutes of every meeting as well. So we have a document outlining how we arrive at different decisions. So now overseeing your service providers, you are required to reach informed decisions and again, kind of tying it back to that prudent process. So you're selecting your service providers, and that process should be deliberate, and it should be, always in the minutes anytime you hire or do an RFP for a new provider. So what kind of service providers you need? The top one is most common, right? You're working with a record keeper, a provider that's housing the assets and giving you a platform for your plan and for your participants. Third-party administrators, you can either hire an outside TPA, or if your plan is bundled, meaning your record keeper may be doing the TPA work as well. So helping you with compliance and tax reporting. Again, you can outsource the processing of distributions and loans. Investment advisors, that'd be our team, plan consultants, audit. If your plan needs an audit, you'll be looking. And by the way, we have a recent webinar, a refreshed webinar on plan audits. So if that is something that you think you're going to need soon, or you're currently having an audit, definitely reach out. I can get that over to you. But trustees, legal counsel, and when we help clients do an RFP, say for a new provider, we have a whole system and a process in place, so we can take a lot of the work off your plate. But these are some of the things to think about: the nature of the firm, the quality, say the size, their experience, their track record, commitment to this fiduciary standard of care. A lot of times after they answer, say, a written RFP, would select some finalists to come and present and talk about their firm, answer any questions you have, and maybe what makes them stand out. And that's where we can help too, because we know we work with many different providers. So we maybe know the ones that are more in your wheelhouse and would be a better fit for you. The compensation, obviously, that's a big factor when arriving at a decision. The reasonableness of fees is definitely a hot topic in our industry. So being able to, and this doesn't even mean that you need the least expensive provider out there, but the services that they're providing for that fee need to be reasonable. And again, we can help you with that. This is something we subscribe to, this database with plan fees. So you can see for your plan size, kind of what is a reasonable range for total plan fees. It goes even deeper on what our record keeper reasonable fees, what our advisor reasonable fees for my plan size, things like that. Even if your plan is happy with your provider, doing an RFP, so benchmarking your plan fees from time to time, every few years or so, is what the Department of Labor deems as best practice. But we can help you get quotes from other providers. Hey, Fidelity, what would you charge to run our plan? Principal, what would you charge? And again, we have a nice system that helps us with that and puts it in an easy to read format. But again, even if you're happy, that's something you still should do. And sometimes this practice helps too with negotiating your current fees. Say you're currently with Empower, you look at 3 other providers and they're a little bit less expensive. You can go, hey, Empower, look, you need to work with us here. Give us a concession. We're a very loyal customer, and here's what else is out there in the marketplace. So that's nice too. Just doing kind of price checks and things like that as time goes on and assets change, and maybe the services that you're requiring change as well. So the next section is on participant education. And there's a whole list of documents and notices that are required for your participants. Your record keeper will help you a lot in this regard. So compiling annual fee disclosures, summary plan description, if you make any changes, summary of material modification, summary annual report. If you are changing providers, they'll provide a blackout notice. If you make investment changes, notices there. And then there's those annual notices having to do with your plan design. So are you a safe harbor plan? Do you have a QDIA, qualified default investment alternative? Do you have automatic enrollment? So really lean on your providers for helping with this documentation. Some will even go as far as to send it out for you. Some will for a fee. It just depends there. But making sure, speaking of plan design, you want to make sure that that fits your specific needs as well. So what are your employer contributions like? Do you have a match? Do you have profit sharing? Does your match formula align with your objectives? Do you have specific eligibility criteria that fits your workforce? Some companies have higher turnover in those first couple months than others. You can choose whether you provide education or investment advice. The flexibility is nice. A 401k, say, compared to other ways to save like IRAs, there really are a lot of different bells and whistles and different design metrics to really arrive at a plan that meets your needs. Thinking too, like outcomes for participants. Do you, and again, lean on your providers for this. A lot of them have nice quarterly reports with data, but what is your current participation rate? What's the average deferral? Do you know how many of your participants are on track to reach their retirement goals? So these are things too that we like to incorporate into our committee meetings, just to see, you know, investments are one thing, but in the day-to-day with the usage of your plan, you know, how well is it working for your staff? And then investment advice, not all advisors can provide fiduciary advice. So if this is important to you, this is something that you really want to make sure you align with the team that can be a 321 or a 338 and can give individual recommendations to your staff. If they were to call up their record keeper, say back to my Fidelity or Empower example, they can give them general information, but who they call in the call centers can not typically give them individual investment advice. So we do a lot with targeted communications as well, or even going far as to do different generation type presentations, or do we want to target this group is eligible, but they're not contributing yet. They're missing out on the match. So we try to be creative with our education and getting people to take action. So we do group meetings in person, one-on-one meetings, and virtual style of both of those as well. And depending on the company and the demographic and where their employees are, sometimes virtual works better. It just depends. Also last year, we created this 8 Steps to Becoming Financially Well mini series. And this is on demand. It's out on our website. It's on our YouTube channel as well. So I've been really encouraging people to go through this as well. Each step is just a really short video. And again, it's on demand. I like it because it's not just talking saving for retirement. It's kind of overarching other parts of their financial wellness as well. All right. Plan administrator basics. So kind of going to the plan document here. So your plan needs a legal plan document, and that houses all of the provisions that you've chosen. It's pretty long, but again, you just want to make sure that you are operating how your document says you should be operating. So some important aspects here: who may be covered under your plan, how much can they contribute, how much can or will the employer contribute, vesting, distribution options, do you have automatic enrollment, things like that. Again, audits, this may not pertain to everybody, but once your employee count gets over 120, you have to start getting an IRS audit. And we can help you with that, with determining, do you need to, who do you want to do that, et cetera. But that might be something you're dealing with as well. You might also come across, this is not as common, but could come across a Department of Labor audit or investigation. If that happens, call us right away and we can help you with that. And your provider as well can help you with getting documentation together. There's been a lot out there in the last few years with 401k, ERISA type litigation. A lot of the lawsuits we're noticing have to do with plan fees. And this is just one for an example. And again, this is not to scare you. In fact, when our team heard of this one, we said, okay, good, we're covering all of our bases. We're doing all the right things behind the scenes. But Hughes versus Northwestern University, some university employees claimed that the fiduciaries of the Northwestern University 403B plan violated the duty of prudence by failing to monitor and control the record-keeping fees. And then on the investment side, offering mutual funds and annuities in the form of retail share classes and offering complex investment options. So the employees ended up winning because the investments inside the plan weren't all prudent. The university was trying to say, well, we give a variety. You can either do these mutual funds that are simpler and lower cost, or we have these other annuities and retail share classes, and which are more complex and expensive. And the reason why the employees won is that each and every investment in the plan needs to have a reasonable fee and demonstrate the reasoned selection and monitoring. So best course of action here. And again, we were kind of going, okay, good, we do all of this. You conduct periodic due diligence, hire experts to benchmark those plan fees, and then have documentation in the minutes of that. And just yesterday, I was meeting with a client and, they had a whole list of mutual funds. Not all of them were the institutional share class version. And so even though their plan fees overall are extremely low and reasonable, I said, well, let me still go though to the provider and at least have documentation that we asked, hey, for these other three, can we get the institutional share class? So just to, again, have that conversation and show that you are at least asking these pricing departments for the lowest expense share class of the funds. Engaging in a fiduciary process is your most important line of defense. So again, if the Department of Labor comes in and says, we're going to audit you, you can say, okay, I've got all my minutes. I've got all the documentation from all my committee meetings. I have, everything here documented, leaning on my advisor and my provider. And I've got all my bases covered. I have an investment policy statement, things like that. So know how your service provider is compensated, how much they're earning, what are they getting from revenue sharing from the investments themselves, periodically benchmark them. Like I showed you the fiduciary decisions report, or put it out to a full RFP, getting quotes from other providers. Periodically monitor all the investments in the 401k. Our process has been, we send out quarterly investment due diligence, and then typically we're meeting for a full-blown committee meeting semi-annually. There are some variances from that, either quarterly or annually, but I would say for the most part, our plans fall in that semi-annual. But if something needs to be addressed, in between, we just have a specific call to action meeting. If a plan is closing down, or if a fund is being mapped to a different fund, documenting reasons of those change, offer a mix of diversified option. Typically, we see some sort of target date fund or model portfolio option, or give participants the option to pick and choose and create their own mix. These are some of the major areas investigated by the Department of Labor. Number one is just timely deposits. You got to make sure you're putting the money in on time. In our audit webinar, the two co-hosts talked a lot about that. Ensuring participants receive their statements and notices on time, compliance with Fidelity bonding requirements. I'll talk about that in a moment. Timely and accurate filing of the Form 5500s, etc. So speaking of, when you are filling out your annual questionnaire, when your provider is going to be doing your compliance testing in preparation for filing your 5500, one of the questions on there is if you have the proper amount of fidelity bond. And you must hold fidelity bond insurance equal to approximately 10% of your assets at the beginning of the calendar year, up to 500,000. That is a requirement. And an option on top of that is number 2, ERISA fiduciary insurance. That's advisable. It basically protects you as an individual charged with the responsibility of creating, managing, and administering employee benefit plans. So I don't see this as often, but it definitely is just another layer of protection insurance there. And I kind of mentioned these items as I went through, but here's just more samples from the committee meetings that we lead, say an agenda. We always have the minutes from the previous meeting, plan review. So from your provider, any metrics or reports they're able to provide, investment policy statement, the actual investment analysis, fee analysis, and we always talk kind of an education update or plan for the future. So again, after this, you're going to get a recording of this presentation. You're going to get this nice summary and compliance deadlines that are helpful for you. Just for our planning purposes for the future, really quick here, one more poll. What other topics do you want to learn more about? So if anything sticks out to you, this is helpful for us in going forward. And some of these topics we've done before or repeated, like audit was an example. We had that as a part of our webinar series several years ago. We brought it back again. So things change and we want to refresh too. Okay, so definitely want some plan design help. And actually, I'm not making this up. Our next webinar in our webinar series is exactly pertaining to that. So talking about best practices with plan design. And if there's anything else, you can drop it in the chat or always feel free to send me an email. You're going to be able to go through this optional, totally optional, but this additional training, again, we cover the cost of it, but it's called Fiduciary Essentials for Defined Contribution Plans. Just a really nice thing to have in your file that you went through this training and learn more about the decisions that you are making in real time in regards to your 401k plan. So there's 3 sessions with quizzes, and there's a course assessment at the end, and there's a handful of other resources that you're given as well through that credential. So when you exit out of here, you're going to get a little survey, and in that you can drop your name and email if you're interested in going through that credential. Otherwise, this will be up on our website along with our other trainings, 401kplanprofessionals.com. You can find us on YouTube. You can subscribe, the 401k Plan Professionals page. And then here's our webinar series. So here we are in August. Next Thursday, Gina's doing the Creative and Effective Plan Design webinar. September is me going through that financial wellness program. October, cybersecurity. So you can see we already have things planned through 2023. You can use that QR here to register for those upcoming webinars, and then everything is saved out in the library. So past webinars are available on demand for you. Real quick, so in April, we have our annual Fiduciary Summit at the Golden Valley Country Club. This is a half-day, jam-packed, really valuable information. Our team will speak on hot topics in our industry, and then we partner with a few other guest speakers to provide you with some really great insight. Another nice thing to have in your fiduciary file that you're doing this kind of annual training. We always have really good food and great speakers. It's a good morning. Okay, so I mentioned some upcoming webinars, and the next one of these will be November 9th. Feel free to pass any of this on to colleagues, friends, past colleagues, if you think anyone would find value in it. And if you have any questions, you can quick drop them in the chat. Otherwise, feel free to call our team. My email is here on this slide as well. We're always here to be a resource and to answer questions. All right, I don't see any questions coming through. Thank you so much, everybody. I know I went a little bit over. We covered a lot.